Hello friends, and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Vardhaman Textiles. Can you invest in this stock and how are the numbers shaping up? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Vardhaman Textile, here's a small request. Kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up on market and company talk and short-term calls. And also, if you can pay $100 upfront, you get 1 year access by paying 16% less. And also, if you cannot pay on credit card on Patreon, then you can also join the YouTube membership, which is a monthly membership that you can apply for, and you get all the benefits that YouTube members that Patreon members are getting. And then if you have number of shares with you, or you want to have a one-on-one conversation with me, then you can directly email me and we can work things out with a fee. Now the company was established in 1970, and they provide textile products and ready-made products. Vardhaman Knitting Yarns and Vardhaman Textile is one of the renowned brands in India for the past 30, 40 years, 50 years, and products include fiber, yarn, textile, threads, and special steels. The market cap of the company is around 11,500 crores, so it is regarded as a small cap company, and it is a more of a national ready-made apparel company or a play rather than anything else. In terms of numbers, then sales grew by 50% year on year this time around in September, and profit surged by 900% owing to other income as well as operational efficiencies. There's high promoter and institutional holding with only 11% free float, which is also a big positive that high level of HNIs and the FIIs are invested in the stock. And what has happened is in the September quarter, both DII and FII have either increased their stake or the stake has remained the same. They have not sold their stake in this company. ROE is around 6 to 10%. Operating profit margin of 28% is quite good considering the industry that it works in. If you look at the performance, then stock has been an outperformer in the last 18 months. It has been 3x in this period and have produced very strong Q2 numbers as we have seen on the top and bottom line. Remember that fashion and apparel industry is now picking up, and products are in demand, especially from branded companies, and branded products are in demand rather than people buying from street vendors, etc. People do like to buy brands, and that has been seen across product categories. So this is something that is on the cusp of a major breakout, this industry itself. The PE remains low for the industry, and I'll explain as to why the PE remains low. And that is why for these type of companies to do extremely well, they have to produce very good numbers on the bottom line. So why it is that the PE remains low for such businesses or this industry altogether? Power supply is erratic, although government has done a lot in order to have power at all corners of the country. But supply of power to industries, etc., is hampered, especially in northern part, and that has an effect on production. Some in some quarters production is pretty good. In some other quarters, it is difficult to have the same level of production. Machinery is obsolete, and machinery is expensive when you try to get it from abroad, say Germany or other parts of Europe. And so many of you can say companies do not afford it, or try to avoid it, and that's where you can say a production efficiency goes away. So you have to keep on investing into machinery and capital. So that's also one of the reasons why investors don't like to give it a high PE. High PE is given to consumer oriented companies, cash type of businesses which work in cash, like selling biscuits or paints or chocolates or baby food products, etc. Debt is high in this industry because to set up the business you need quite a big area in terms of land plus machinery, etc. So a typical, you can say, old economy business this is, and that is why debt remains high because company do not have most of the companies do not have that much cash to really work upon. Capacity utilization is low, especially in this day and age of the pandemic. Over the last 2 years, it has been going up and down, and it is extremely difficult to have social distancing, etc. And so the capacity utilization completely go for a toss if there is a complete shutdown for the industry. So it is a very high capital intensive business, and that is why the PE remains low for this industry. Apart from that, you have volatile raw material costs. So again, cotton prices and other raw material prices have surged. Recently, we saw oil prices surge, and now they have come down sharply over the last week, 10 days globally. So, and then transportation cost and other cost remains. Then there is, you can say, uh, exchange rate fluctuations if you are working abroad and you have exports, etc. So many things play a part. There's low productivity of labor and competition from a number of companies, both online and offline. So you have to understand that these kind of big businesses, which used to work big time in 70s and 80s, now are facing a lot of stiff competition from global players, because a lot of things are available online and a lot of products are available online with many Indian players that are into fashion brands, and you can say most of the people prefer buying from there with heavy discounts, etc. So this is also hampering the business, and that is a great you can say threat to the profitability of such businesses. So that these are some of the reasons, major reasons, as to why the PE remains low, and investors do not give very high PE for such businesses. So what needs to be done in the stock? Well, basically this has been an outperformer. So this is with regard to Vardhaman especially. I believe that this can be a very good company to invest into. You can buy around 2000 to 1800 levels. Around these levels you can accumulate and hold patiently for 2 to 4 years with the kind of investment that has been done by FIIs, DIIs, and large investors. I believe over the next 3 years, it is at least a doubler from here. It could perform even better because the numbers are in the uptrend and they are doing well in the industry. So, in terms of all that, you can say, although it is not the best of the sector, and you can buy small positions in there, remember that the PE will remain low. So do not expect a very big PE expansion, but the company, if they can produce 2 3 good quarters, the stock should surge from here. So if you have it, then hold. If you don't have it, you can build 5% position into this sort of a stock, no more than that. So this is my video on Vardhaman Textile. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. Thanks a lot for watching.